Welcome to Money Answers TV. I'm your host, Jordan Goodman of MoneyAnswers.com. Today we're going to find out more about how you can sell your unneeded life insurance policy for tens or even hundreds of thousands of dollars instead of letting it lapse. My guest is Oleg Eydelman, Senior Life Settlement Analyst at Life Insurance Settlements, Inc. Oleg, welcome to Money Answers TV.
Thank you for having me, Jordan.
Please explain what usually happens when a life insurance policyholder no longer needs or can afford their policy anymore.
Well, most people aren't aware that there are any other options beyond just lapsing, surrendering their policy. At that point, they get nothing or virtually nothing from the insurance company for their unneeded, unwanted insurance.
Why would someone not need a life insurance policy anymore?
There are many reasons why people buy insurance, and those needs sometimes go away. Some people buy their policies for estate tax purposes. Sometimes the estate tax laws change. Sometimes somebody's estate size will change. Somebody might buy that policy for their business and maybe they retire or sell their business. Most people buy their insurance policy for their families, for their young families. But those families grow up and those kids graduate college, have their own families. So many times those insurance policies become unnecessary over years and years.
Instead of letting the policy lapse, what are the benefits of selling the policy into the life settlement market?
Well, the biggest benefit is we help them realize what their true value is for their insurance policy, not the number that the insurance company wants them to take. That number sometimes is tens, even hundreds of thousands of dollars they didn't realize even existed for their policy.
How much could people expect to get for selling their policies, and what are the factors that determine the price that they get?
Well, every situation is different and unique. The factors that are most important for our process is how old the person is, if they're dealing with any health issues. They also want to see how expensive that policy is moving forward. So sometimes the policies are just worth a couple percent of the death benefit, but many times it's worth far more, even 10, 20, 30%. And we've also seen people that get 50, 60, even 70% of that insurance policy's death benefit as an offer.
Can people sell both term and cash value policies?
Yes, we can work with any type of policy, even a term policy. Now, it helps if the term policy is still convertible, but we can work with any type of policy.
Once the policy is sold, who pays the premiums?
The buyer will pay all future premiums on that policy. Just like when you sell your house or any other asset, that policy is transferred over to the buyer, and at that point, it's their responsibility to make all the payments going forward.
What is the process you follow to help people find a buyer for their policy?
Well, the process is quite simple. The only requirement is that the owner and the insured fill out a short application and submit it. At that point, we will order medical records and insurance information so that we can forecast how expensive those premiums are going forward. At that point, we'll use that information to send out to our buyers for review and then a bidding process.
How long does the whole buying process usually last?
Well, initially, it takes about 6 to 8 weeks for us to get a firm offer, the highest offer in our marketplace. If that offer is acceptable, it'll take another 3 to 4 weeks to get the policy contracts completed and the money paid to the seller.
Who are the typical buyers of life insurance policies, and is there much competition to buy a policy that fits their criteria?
Our typical buyer are large institutional funds that are looking at these policies and buying hundreds, if not thousands of these a year, spending billions of dollars. And we've seen very, very aggressive bidding competition on these policies, as best as we've ever seen.
What attributes are policy buyers looking for from the owners of life insurance policies?
The most important factors are the person's age, their health, and how expensive that policy premium is going forward in that policy. Now, generally, they look for people at least in their mid-60s, but if they're younger, if they have serious health issues, they could still qualify.
Should the policy owner tell the existing beneficiaries that the beneficiary of the policy has been changed to the new buyer?
Absolutely. Everybody's aware in the process of exactly what we're doing and what's happening as far as selling the policy and the ownership and beneficiaries switching away. Actually, the beneficiaries will have to sign off one of the documents at the conclusion of this process. And it's something that usually the kids are happy that the policy, which is sometimes burdensome on the family, is actually getting the true market value as opposed to just going away for very little.
If someone wants to find out more about selling their life insurance policy into the life settlement market, how can they contact you?
Well, they can call us at 877-485-6681 or reach us online at fundinglife.com.
Thanks very much, Oleg. This has really been interesting.
Thank you, Jordan.
So if you have a life insurance policy you can't afford or don't need anymore, look into selling it instead of letting it lapse. For Money Answers TV, I'm Jordan Goodman.